Portugal's central bank has today stated that Portugal's economy will grow less in 2014 than previously forecast. Natascha Gewaltig of Action Economics is on the phone with me now. Natascha, while the central bank has cited spending cuts set to be implemented the same year as a causation factor, what other downward pressures are we seeing on one of Europe's weaker performers?
I think one of the problems Portugal and the other underperformers have is that they have large structural issues and they've seen a huge loss of competitiveness in recent years, and there is an adjustment process going in at the moment, but that will take some time before it actually comes through. And to a certain extent, it is still quite a turnaround. I mean, the Bank of Portugal has slashed the forecast for next year, but at the same time it's lifted it slightly for this year. And also, we mustn't forget that this year will see still a large drop. So to post any type of positive growth next year will already be a success to a certain extent, because it points to stabilization, which is good news.
The fact that the much talked about budget cuts are set to restrict growth is hardly going to sit well as policymakers work against the clock to try and address divergences on austerity policy, is it?
No, I mean, it will add to the arguments of the opposition in the ongoing talks at the moment, but at the same time we all know that you can't continue to spend more than you actually earn, and it's urgently needed that those issues are addressed. So even if they have a negative impact in the short run on growth, they will have a positive impact in the long run, and it means the earlier those issues are addressed, the better, because by postponing it, you only sort of add to the problems, and the adjustment later on will be much, much greater, because then you have to cut back even more. So there is absolutely no way in avoiding that. So even though it will add to the arguments of the opposition in the current talk, as I say, there is no way around that, and there is no way you can avoid that.
Portuguese bond yields eased this week as the coalition government works towards its Sunday deadline. What do you see happening over the coming weeks?
I think there still is some pressure generally on peripheral yields, as the expectations for further easing in the Eurozone have been priced out to a certain extent. I mean, the yields have come down slightly this week, but only from the high levels we saw when the political issues started to escalate again, and they still remain at a relatively high level. And today's bill sale also showed the sharp rise in refinancing costs compared to the last auction. So I think there still will be some upward pressure generally on peripheral yields in coming weeks, unless economic data starts to come in weak again and markets start to expect another rate cut again, which at the moment, as I say, it has been priced out to a certain extent, despite the ECB's forward guidance, which showed that rates won't go up. But at the same time, there seems to be little appetite at the moment, at least, to do more to help crisis countries. So that should keep spreads at a relatively elevated level.
And lastly, is Portugal the threat to Eurozone recovery that many fear? Or should we consider the Portuguese crisis as simply that, a domestic issue opposed to a regional one?
I don't think, or the other way around. If you look at Greece, if you look at all the developments in the smaller peripheral countries, you see that there is no such thing as a purely domestic issue anymore. Whatever happens there has an impact on how markets perceive the Eurozone as a whole. So I don't think anyone can afford to just see it as a domestic issue. I wouldn't say Portugal is the greatest threat, but it definitely adds to the uncertainty about the outlook for the Eurozone.
That's all for now, but do click back for more exclusive interviews. Goodbye.